afternoon, everyone. Are we asleep? Okay, thank you all so much for coming today. And thank you, Linda, for putting such an important event together. I'm just going to give you guys 30 seconds. I know your bio is up, but 30 seconds just to do a quick introduction. And I'm going to start with I'm going to be giving you some insights. I'm going to start with the cassava queen, as she's well known for. So cassava queen, please introduce yourself.
Thank you very much, and thank you for having me here, and congratulations to the convener of this program. My name is Yemisi Iranloye, and I'm the founder CEO of Psaltry International Company Limited. Psaltry is into the production of food-grade starch, high-quality cassava flour, and sorbitol. We work with smallholder farmers. We're actually the first to use cassava to produce sorbitol, which is used for your toothpaste in Africa. Thank you very much.
Next, please.
Good afternoon. My name is Anthony Oduu. I'm here from Verto. Before I kick off, I want to say thank you to Linda and the team for organizing this amazing event today. Verto is a business-to-business payment company that power SME enterprises and any corporates within Nigeria that needed to pay their suppliers or vendors abroad. So we work with banks and we build infrastructure that make it easier for you to actually pay your suppliers or get paid outside the country in a compliant way. So you can see us are partners with the bank. We make it easier for anything that you want to do when it comes to payments in general. That's what we do actually specialize in. So thank you.
Thank you very much.
Hello. Good afternoon. My name is Wole Abu, and I work for Equinix. I'm the MD for West Africa. Equinix is the digital infrastructure company of the world. What it means is that if you are using any digital device, you go to the internet, you use the cloud, 95% of the time you are passing through an Equinix facility. So it's the tech company that you never hear of because we don't deal with the public, we deal with the people who serve the public. So I'm happy to be here and I'm looking forward to sharing the next 40 minutes with you.
Thank you. Mr. Tokunbo, but we know you're the guy that collects all our money, so I don't know how much introduction, but please go ahead.
I work for Lagos State Internal Revenue Service, where your friends that you hate to love. All we try to do is to partner with you to ensure that you scale up your businesses in a formal way that makes it to be compliant to the rules and regulations of the Nigerian state. So we are here to assist, and that's what we do. So, and I'll be open here, and even after the exercise, I'll still be open to any questions or explanation that you may want to have as regards your tax compliance status. Thank you.
Okay, thank you so much. Mr. Tokunbo, I'm going to start with you.
Sorry, madam, before you start, Mr. Chidi just joined us virtually. If you look behind you, or on the screen in front of you, you see his face. To your right. To your right, yes. Your right.
There's no, okay, to my right.
Can you see him? Yeah.
Okay, please, Mr. Chidi, can you introduce yourself very quickly? 30 seconds.
Okay, thanks. I was wondering whether anybody could see me. So this is Chidi, I'm the Executive Director of Rand Merchant Bank. Rand Merchant Bank is part of financial institution Fund, which is the largest financial institution by market cap on the continent. Glad to be associated with ABNC doing business in Nigeria. Linda and I think we proudly always get associated on a yearly basis for this time. And thanks for having me.
Thank you so much for joining. So, Mr. Tokunbo, I'm going to start with you because we're talking here about doing business in Nigeria, what investors need and what businesses must do, right? Financial growth is not only about attracting capital, but we also need to create conditions to sustain it. I myself have told my accountants to come and tell me everything about the tax reform so I don't get fined. But there's been a lot of recent tax reform which is shaping our landscape. How do we ensure this does not affect business and people can still be attracted to doing business in Nigeria in the long term?
Thank you. Now, I think we need to have an understanding of what the reforms are just all about. The truth of the matter is that it was not about, and it is not about, revenue generation. Revenue generation is just a byproduct of the primary focus of the tax reforms. There are 5 key areas that it was intended to serve. I'll just touch on the ones that are the most important one for Mr. President and the group was that it's to protect the most vulnerable group in the social economic pyramid that we have in Nigeria. That is people at the lowest level, both at the household level and entrepreneurial level that we have here, SMEs and what have you. That's number one. Number two also was to flip the compliance template that we had before. Our rules before were practically incentivizing people not complying because the cost of compliance was much higher than the penalty for failing to do the right thing. It was arranged. Then also, it was through targeted incentives. It was also to support economic growth. So that when you have such, then you have more people in employment, the businesses will do better, and then from the profit or the income generated from these improved economic activities, that's when the tax will come in. And we have started seeing it. So I can tell you that, at least from Lagos State, that's what is happening. So essentially, that is the focus of it. And don't forget also, aside from those incentives that you have, because it's to attract and then to retain, because take the issue of the agro-allied value chain. Every business operation along that value chain is granted a 5-year tax exemption. So it's the first time we're having such a thing, and it's something we should be proud about. Then there's also provision for a reinvestment. When you reinvest what you have before, then you get some exemption as well. All these incentives are there in these reforms and in the laws. So all we need to do as businesses is to ensure that we are programmed to be able to take advantage of these incentives, because a taxman is not a Father Christmas or Mother Christmas. It is what you apply for or what you claim that it will give you. So if you don't apply to take advantage of these incentives, then the taxman will not give to you. So I think that's why it's important that we're having this kind of conference, which Lillian and our group has put up, that people should know what is expected of them to be able to take advantages that are inherent in the tax reforms. I'll stop here now. Thank you.
Thank you very much for giving more clarity to that. So I'll come to the cassava coin. So, you know, we're talking about doing business in Nigeria now, and you have demonstrated, because what you're doing is actually extremely unique. You've taken an opportunity to have a large-scale industry. What other sectors, because people are here, there's a lot of business idea opportunities, what other sectors or what other opportunities do we see in Nigeria right now that is underestimated? Because years ago, agriculture wasn't sexy, for a lack of a better word, but now, you know, people are making a lot of money. Not only making a lot of money, they're empowering people in the communities. So what other sectors are you looking at, or do you see for Nigerians?
Thank you very much. The sectors that are available right now, they are really very large. I don't think if I start to talk about the opportunities in the agri space, we will not be able to exhaust it in 1 week. It's a whole lot. But I will just pick out some unique opportunities that will tingle our ears. When we're going to do the sorbitol plant, you would just think that it's just sorbitol, cassava, and then it turns to sorbitol. Oh no, it was cassava, we had enzymes, we needed nickel, and then we needed hydrogen. So I want to produce sorbitol, but I have about 6 industries in there, meaning that I needed someone to produce hydrogen for me, and I could produce hydrogen from methanol, simple methanol that I can also get from corn or sorghum or even cassava itself. Now I have to of course import methanol, and then we set up a hydrogen plant. But then as we started, we found out that we needed to import nickel. That's an opportunity. But I couldn't produce nickel, so I have to import nickel. That's an opportunity. Somebody can just start a nickel factory somewhere in the bush there. It's just a simple factory, but yet nobody's producing it in Nigeria. So the opportunities are wide. If I want to go into agriculture, take cotton for example. We have a lady in Oyo State who grows cotton and then polishes cotton. But look at the amount of cotton that is imported into Nigeria. Massive. Yet cotton can grow very well in Nigeria, and we can just do first and second stage refining of cotton, and then we'll stop importing every fabric into the country. If you go into the fruit space, after you have taken all the mangoes of this world and you have produced them, you have the pulp, the waste. Picking the waste alone can give you about 3 different industries. I'm talking of the waste. Just the waste from the fruits that you drink every day. For example, the waste from cassava, we turn it into pellets, and we in turn use the pellet to fire our boiler. The fruit water, that's the wastewater from cassava, we use to produce biogas. We use the same biogas to generate electricity. It's a whole lot that we can do, and the opportunities are really wide.
Thank you very much. Thank you so much for that. So, Chidi, let me come to you. We've heard, from Ms. Yemisi about the opportunities that exist. Now, as an investment banker, or from an investment banking perspective, there are a lot of risks when it comes to starting businesses like this. So how do you determine when a market like Nigeria is ready for institutional capital? Because all these businesses, they cannot do it by themselves. They need institutional capital. So what are the layered risks? What are the things that you look for that can give them the funds that they want, and the risks? Because people don't really look at the risk. They just think, I need this money. So what are the layered risks?
Thanks. I think that's a very important question, because I think one of the critical things that people think that volatility, people run away from volatility, but that's not the case. I think one of the things that institutional capital looks for is actually volatility, because it does actually present a return. But I think the risk is actually predictability, right? So there's one thing to have volatility, but there's one thing to be able to predict the cycle of volatility. And I think what the Nigerian market, the opportunities that people just can't predict. So if you're going to put in an investment, the risk is that, yes, currency might move up and down, but if you can't predict the pattern, then it makes it a lot more difficult for institutional investors to actually look at the market as attractive. But we can see the benefits now of predictability, because if you look at what has happened in the past, people can actually, to an extent, just predict what the currency or what the macros will look like, and you can see that the capital is flowing. And I think one of the other things is also consistency. So over time, what markets look for is that the things are consistent. So you want to be sure that policies are not changing, rules are not changing, or certain things that you do have control over are not changing. And that consistency actually gives comfort to institutional capital, that they can actually plan for a longer horizon. Because no one wants to, the kind of capital we attract these days is that they want to come in on the short term and go. But people, you would see that they're actually institutional capital that would prefer a longer horizon, because they don't want to be riding the wave of short-term volatility. And I think one of the last things that I would say is also liquidity, the liquidity of the market. So, and I think that's what we are benefiting today and we're seeing a lot more of interest because people are now seeing that investments in and out. And I think that liquidity is important and the market needs to continue to build on the trust that the FX liquidity and even the local currency liquidity is actually there, right? And I think these are very key principles, right? And I think the good thing is that the market has actually been following these principles, and hopefully they stay that way because it actually gives people confidence that, you know, if you actually measure the risk, because risk, people can understand risk. So it doesn't matter what investment people are asking for. There are capital that understand different industrial risks. I think these are just the three elements that sometimes make it very difficult, you know, to attract institutional capital.
Thank you very much. I guess liquidity is one of the things we really have to pay attention to. So let me now come to infrastructure. You know, we have power issues, then there's a big deal on digital infrastructure. So I'll go to Mr. Wole. You know, what, in your experience, makes digital infrastructure projects investable in Nigeria, and especially when you're looking at not so serious long-term capital? Because, I mean, you've had a very good history from Main One. So what makes digital infrastructure projects investable?
Thank you for that. Thank you for that question. There are fundamentals that make any business investable. There must be demand for that service. Digital infrastructure is no longer a debate about whether it's needed. In Nigeria today, for example, maybe we're operating at 40 megawatts combined capacity, when the need is about 600 megawatts. We're not even doing 10%. And that small bit that we have is contributing between 10 to 20% of GDP of Nigeria, growing at 14% quarter on quarter. So the question is not whether the demand is there, not whether it's a critical industry. It is around something that she had mentioned earlier, around the ecosystem. You start an industry, then you find that something else is missing, then you jump on and on. So down to your direct question, what makes it investable? There are drivers. So the demand is there. There's cloud adoption. We heard from the MTN lady just now. Everything they do there. There's a physical layer that supports digital infrastructure. The fact that you are making a call here doesn't mean that it's in the air. There's a physical cable that got into this building that's passing this road. It is powered. Then people who know, network engineers, as we speak, they're working on it 24/7. So they're the hidden layer. And that is what needs to be built. You don't just build services without having that underlying thing. So it's like the foundation of a building is never noticed. You can't see the foundation of this building. The day you start seeing the foundation of this building, then there's a problem. We tend to focus on the color of the building, and therein lies the rub. To our tax people, exactly, to the power industry and co. We are very aware of services. We know lawyers, we know accountants, but frankly, we're not a tech country, so we don't know what engineers do. We don't know what kind of investment goes into there. Yeah, some of the banks, they're beginning to know because they are global. But the typical bank, they can't fund an infrastructure project. They don't even understand it. And it is a very long-term type of thing. Yeah. Building a data center, for example, is a 24-month project. From when you start building it, not when you have the land. Building a power plant is a 10-year project in a country where you have volatility up and down. So you have to really understand what you're doing. What really in Nigeria, we come down to Nigeria, one of the key things is that there's a concentration risk from an investor perspective. 90% of digital infrastructure is sitting in Lagos, which is why we landed another cable in Kwa Ibom to try and diversify from Lagos. I think if you recall 2024, there was a fiber cut. 4 fiber cuts went down due to tectonic issues in Côte d'Ivoire. And, you know, people couldn't make calls. That's when suddenly people realized, oh, you mean there's something that can go wrong? Just because it works perfectly doesn't mean there's no work going on. We don't have a ship in Africa. There are ships that lay that fiber. There's not one in Africa. You're not even talking about Nigeria. And if Nigeria, for example, does not start thinking about policies that fix it, there are only 2 ships that service Africa, and they are sitting in Europe. So if you have a fiber cut, a submarine fiber cut, you have to mobilize a ship. It's $50,000 per day. Meanwhile, you'll be waiting for permission. That's the third thing. They have different, you have NIMASA, you have MPA, you have expert, you need 200,000 permits to get a ship to fix a critical national infrastructure.
Wow.
So we need to, so there's the education part. Why I like coming to conferences is that, you know, bit by bit, you know, we start to understand what the heavy lifting that needs to be done. So if you go back to the number I told you, we are trying to run a digital economy on analog infrastructure. We have huge demand, huge gaps. From a power perspective, we are not generating enough power to, the data centers in Nigeria can't rely on power. And in the Presidential Power Initiative document, which is the strategic document for power for Nigeria, data centers are not mentioned by name once. And that is the largest consumer of power in the world. Everywhere you go, they're talking about, oh, data centers. We can take the entire power that Lagos needs and run one campus. So then you have a strategy that's transforming power, and data centers are not mentioned. So you see that there are also gaps in understanding. Policymakers, academicians, and private sector need to deliberately understand that trade infrastructure, factory infrastructure, education infrastructure, health infrastructure is actually just digital infrastructure. You can't optimize anything without digital. And for every $10 million put in a 1 megawatt factory, just before the 1 megawatt data center, before the data center becomes operational, is 1.7x return, because the construction process gives you 7% increase already. So it boosts economies. But you know, these are things that I'm sure we'll get into over time.
Thank you so much. Very educative, because I think it's something we just take for granted and we don't know the amount of work. Let me come to Verto. I'm going to change your question because I think for our audience, it's very important we understand something. We know that Nigeria has grown now in terms of, you know, a lot of Nigerians are doing businesses all over the world. So it's not just transaction naira to naira. And you're a B2B solutions provider, and you've just come into Nigeria. So technically, I want to understand your benefits, because I think it's important. We're talking B2B, but the first thing you do, you know, I was speaking to one of your colleagues when I came in, and she was like, oh, we can help you. I'm like, I just send my notes to the bank and tell them to transfer, and it's done. But that's a service you offer, right? And then I think about 2 years ago, I was doing a transaction, and I was told I cannot transfer dollar to dollar in Nigeria unless I'm an oil and gas company, that I have to send the money out, pay all the fees, and bring the money back. So are you going to solve all that problem?
I would say yes.
Really? Yeah. So I think, explain your business model. What are the benefits of us coming to Verto rather than, you know, going to banks?
That's a very good question. I think when it comes to payments in general, a lot of people don't understand how complex payment is. So every country in the world, we have regulations. So this regulation is a way to keep capital, to make sure that capital doesn't just leave the country. So you might have like a foreign investors that invest money and they just want to repatriate every advantage that they have, right? So what tends to happen is every regulators, they want to protect that money not moving easily within the country. The second part of it is that if a country has its own local currency like Nigeria, where we use Naira, what you don't want is to have another currency that is easily being used within the country because it makes a country, your currency very volatile. It means that it's not stable. It means like foreign investors don't believe or like literally trust that coming to your country to invest. So what Verto does is that we are a regulated entity where we go to different country, we localize customers' experience, we ensure that there's legal and compliance in place, we get licenses in place, we have AML policies, safeguarding requirements, ensuring that the real transactions that are flowing between banks or between different companies are legitimate transactions. Because the moment you don't do that, what you're actually doing is you're allowing the bad actors, a group of people that are not trying to do the right thing. So a company like Verto, we've built B2B payment infrastructure across different geography. One of them is Nigeria, where we work with banks, we work with regulators. We ensure that things like liquidity, which is always a problem. So being able to get access to dollar, pounds, euros, or any currency in the world, you're able to do that through Verto today. What that means is that if a business in this room right now and you're SME, and you are buying something from China, one option is to go to your bank and basically tell them, can I make payment to China? The chances that they probably say yes. But how long it takes for you to actually do that service or to actually pay your suppliers, it could be 2 weeks, it could be 1 month. The second part of it is actually liquidity, which is the biggest problem. So if I'm an SME and I'm only trying to send $5,000 to China, most banks in Nigeria today will offer you some liquidity. But the moment you get to 100,000, $1 million, and so on, that's where you get into like a bit of a problem because that liquidity is not easily available. So what we've done is we build infrastructure, a marketplace infrastructure that allow different participants. Some of them are banks, some of them are other businesses that come to our platform because of our compliance stack. They trust us, so they're able to exchange their own currency. So that brings more liquidity into the market. What that means is that when a business in Nigeria wanted to pay suppliers tomorrow in China, because we have local rails in the US or in China, we can literally send that money today and their suppliers will get the money tomorrow. Now, if you replay that back through your banks, you probably have to send that money 2 weeks ago just to make sure it lands. What that does, it means that your cash flow is always going to be impacted because you have to use money that you probably don't have today to send it 2 weeks in advance. So those are the problems that Verto is trying to solve. We're not trying to replace the bank. We're just trying to make the whole payment flow to be much more seamless and obviously look after the customers.
Thank you so much. Now, I'm going to stick with you because obviously during this journey, you've had to raise funds, right? And we know that there are a lot of young tech people out there who are also trying to get into this space, right? So what advice would you have for Nigerian tech companies designing products that solve, currency and liquidity challenges? What advice would you give them, but ensuring that they still meet the global standards to be able to get that funding? What advice? And what has helped you as well?
Yeah, I mean, that's a very good question. I think a lot of fintech, a lot of founders, when you start out, you usually have one problem that you want to solve. In most cases, people are trying to solve symptoms, not the infrastructure problem. So when you're solving the symptoms, it means that there's probably like a few people that need your solution. But when you solve an infrastructure problem, like what Wole was saying earlier, infrastructure is so important. It connects the dots across different functions, different departments, different industry as well. So what I would say is like, if you are a local founder that you're trying to build a local business, at the same time you want to go global, you have to think beyond symptoms. You have to go into infrastructure side. What that means is that your depth of your infrastructure needs to be really good. So in my board, you have to be able to build a good compliance stack. You have to be regulated. You have to make sure your AML, safeguarding policy, all of those things are in place. You have to have trust because when you work with the banks as well, the banks want to make sure that you are representing them in the right way. You have to work with the regulators. Outside that, you also want to look at the market relevance. Because right now, what is relevant in Nigeria as a problem is probably not relevant in Kenya. And I'll give one example. In Nigeria today, every time I come to Lagos, I pay using bank transfer. It's one of the most efficient payment systems. In the UK, you don't do that. Like, you just tap your card and it works. Now, if you go to Kenya and you're a Nigerian business thinking you're building some amazing solution for Nigeria, and you go to Kenya, I guarantee you it will not work because everyone uses M-Pesa. So it means that you have to have market relevance. You need to know what problem you're solving, who are your real customer. Outside market relevance, I'll probably also say that you need to think about unit economies. It's a lot easier when you start a new business to think about how quickly can I send money, how can I build a wrapper on top of someone's infrastructure and so on. But if you have to literally spend your money for people to use your product, it's probably not good enough product yet. Because the moment you need to charge them, that's where you will know whether you have free customers. So you want to make sure from day one, your unit economies are really good. I would probably say the last part would be credibility. And I'll say in my word, credibility means you need to be regulated, compliance, and when you're moving money in millions and billions of dollars, you cannot afford to make mistake because one mistake means like maybe one bad actor is receiving the money or you are financing terrorism and so on. So you want to build credibility that is regulated as much as possible and also relevant. And I would say the last part of it is probably you need to be something that's defensible. So it means that you can't just build your stuff on top of other people's solution and you hope that that's your business forever because at some point other people will come after your food. They will do the same thing as you. They might be better at marketing. They might be better at branding. Before you know, you have no business. So you need to build defensibility into your product.
Thank you. Thank you very much for that. Let me come back to the agricultural side of things. I think a lot of people want to go into agriculture, but capital remains a big challenge across the whole of the agribusiness. So what do financiers often misunderstand about funding the agricultural sector? You know, I mean, what have you put in place? You know, what has helped you? How have you been able to get capital to scale your business?
Thank you very much for that question. First of all, for me to start, Psaltry started 20 years ago in 2005. Within 2005 and 2012, all I was doing the planning. Agriculture is not a business you wake up one morning and want to do it. No matter how beautiful your plan is, I mean, how much money you have, there's that little gestation period of you thinking through it and learning it in a small way. So assuming you want to go into, let me just take an example. Say, you want to grow birds, that's chicken. You know, chicken is raining now, it's very profitable. Everybody's rushing into it. But you'll be sure that all of them will rush back in the next 1 year maximum. Now, because chicken is profitable does not mean you just go into it. There's a way to it. You need to learn it. So, first of all, you must do your planning properly. You must know the know-how. It's either you are employing someone who has the know-how or you are acquiring the know-how. So if you really want to be an agricultural entrepreneur, agripreneur as we call it, you have to devote time to learn. That entrepreneurship, that apprenticeship cannot be taken away from agriculture. Now, if a financier sees that you know what you are doing, they will fund you. So in 2011, I left my paid employment. I relocated to the village where my factory is. Between that 2005 and 11, I got land. I was farming. I burnt my finger. I lost my money. I reinvested. I knew it at the back of my palm. Then I said, okay, I'm ready. Then I relocated. Now, I asked First Bank, I asked First Bank. They were my first bank at that time. The first answer was no, second no, third no, fourth no. But I didn't stop. Then one fateful day, the bank manager called and said, we are coming to your farm tomorrow. And then when they came, they saw preparedness. They saw I was ready. They saw I already had a farm. They saw I had a tractor. I built a small hand on my farm. They saw I was living there. So it was easy for the woman to say, I will invest in you. So I think you being prepared, when the financier sees you are prepared, you started taking your step. You're taking the risk with your money. it's easier for them to jump through. As we continue to climb the ladder, we got our first loan. We started with the CAT loan from the CBN, second, third. We got to a point we needed equity. So we approached the venture capital Alitia, and then they were able to fund us. Why again? Because we were ready. We had structure. We had built it into a business that you will love to want to be part of. So I think it's more of a process. It's a process.
So everyone, Rome wasn't built in a day. It's a process. I'm sure when you go to her farm right now, you see everything has been put into place. You wouldn't know what she has been through. So preparation is key. And I'm going to ask Rand Merchant Bank as well, what are global investors looking for? And I'm going to ask another question because I think it's important. Global investors sometimes fund in dollars, and you're earning naira. So how do you bridge the gap there? Because, for Rand Merchant Bank. So how do Nigerian companies, how will they prepare? Because you see all these proposals all the time. How should they be preparing for global investors? And how do they edge if they're getting that money in dollars and their income is in naira?
Okay, thanks. I think I was actually enjoying what she was saying because she kind of highlighted some of the principles which financial institutions look for and institutions like mine, right? So it's actually understanding the risk of your business. So she's lived through it. So she's lived through the cycle of understanding the risk and then most likely understanding exactly how to mitigate it. So even currency risk. So I'll give you an example. So you mentioned something about, so currency risk is not a problem, right? It's also the who do you allocate the risk to? So if you think about her business aggregate, so if you introduce currency risk and then there was a movement, can you transfer the price of that risk? So who owns the risk? And then when you understand the risk, then it's easy for you to tell the institution, these are the risks, this is who owns the risk, this is how the risks are mitigated. Then it's now the institution can actually make an analysis and say, okay, this is how I can price the risk. These are the things to do if this risk crystallizes. Then one of the other thing is governance, right? And I think this is one we are always very particular about. Sometimes institutions or companies shy away from the proper governance. I tell people just easy things like transparency in reporting and how you actually show that transparency is important because for anyone that's taking back money, you see that one of the things they want to know is time and time again to see that the governance is right and they get information that they're able to measure, whether the money that they have actually given has been used for the right resources or it can be repaid back. Then also understanding the governance of the institution itself, right? So if we as Rand Merchant Bank are giving money to an institution, we need to make sure that the founder is not the CFO, is not the CEO, is not the treasurer, is not the operator. So it gives responsibility to different people. And each person has a level of accountability to be able to deliver on their own part of the job. Because it also removes the risk of the key man risk. Because if we were funding into an institution that it's very clear that the governance structure of the system is not in a way that you diversify the risk, then it means if you remove the founder, then the organization is going to collapse. So then it's very difficult to finance.
Thank you very much.
Other things, and just one last thing is just understanding the confidence in what has been proposed to the bank. So I always say you bring in projections or you say this is how business will go. It is the confidence of understanding whether those numbers are real, right? As bankers, we're not in this thing to actually be industry experts. We will need to get from the companies to see that these things are actually right, and then we can predict, and then it actually holds true. Thanks.
Thank you very much. Thanks. Let me come to you, Mr. Tokunbo. There's a lot of fiscal framework reforms that are going on. How do you measure success? Not in terms of revenue but really that you've created a system that genuinely supports sustainable growth and investment. What are your measurement points?
Thank you. So what you can see is that since January up to the first quarter of this year, we've started seeing the positive impact of the reforms. And it comes in numbers, so which are measurable. In terms of voluntary compliance, I think the new minister was telling us the other day that prior to now, we had only about 10-point-something million registered taxpayers. But that number had gone up to 100 million. It's just through digitalization and then ease of making it people to register and comply. That's a 9-fold increase that we have seen. Now, also, we will see a comparative, when we check the comparative number of greenfield investments in the economy. Look at maybe 2-3 years back, and then what we are seeing now. You can see the numbers, and it's in oil and gas, we have started seeing it. People initially were not doing anything before, but all of a sudden, we have some. That does not take anything away from the brownfields. But when you see greenfield investments, it tells you that something positive is happening in the economy. Now, also, for the first time in a long while, we are seeing recruitment. When I say recruitment, we are seeing employment at the entry level by medium and large corporates. Those are positive things that are already happening within the economy. And these are positive signs that we're seeing. And those are the things that we're going to use to measure. And then to reassure the investors and the entrepreneurs, I think the most positive and strong inclination that this government is ready to see it through has to do with the recent appointment of the man behind the reforms itself, now to lead the economy in the position of the finance minister and that of the coordinating minister of the economy. So it's to reassure everyone that the reforms will be driven through, and the positive effect we have started seeing them, then it will be enhanced going forward.
Thank you. Thank you. Let me come to Equinix. We've seen a lot of infrastructure improve, right? There's a lot that has gone on in terms of digital infrastructure. But where do you think businesses are falling short in positioning themselves to benefit and really absorb the benefits that it has in terms of the digital space?
So the constraints, there's an underestimation of the talent gap that is there. So companies can announce digital transformation, they can announce that they want to digitize, but they don't really know that it's not buying a machine that is digital transformation. I'll give you an example, simple. I'm sure we all know that sometime back, people went to schools, I buy laptops for every student, and therefore, I have computerized the school. Now, if you have a laptop, you need power. You need it to be interconnected. That means you need somebody who understands a little bit of networking. Then, if the screen breaks or something just happens, how do you reset the password? How do you change the screen? What do you do? So what happens, then where's the security? Where do you keep this physical hardware? Even in a country today, 80% of outages are caused by fiber cuts, vandalization and construction activity, and power outages. So you find out that, to Cassava Queen's point earlier on, is the digital transformation, being able to digitize, being able to take advantage of this, is not magic. It's an equation. It's numbers. It's planning. You have to do A, B, C, D. And I think we don't have the ecosystem, the critical skills to drive it. Even the universities, we also what happened during COVID. If COVID happens again today, exactly the same thing is going to happen. People will not be able to access education, critical services, because the foundations for it, even from a policy standpoint, you are not mandated to have internet in a school. It's optional. Why should it be optional?
Word. Yes. it shouldn't. Interesting, interesting. So I'm just going to ask all the panelists one question each because I'm running against time, and I'm going to start with the two founders. So what mind shifts are required for founders who want to build resilient and globally competitive companies? What do they need to know? So I'll start with you, Ms. Inka, then you. Both,
Okay.
So what's the mind shift?
I think the first is financial literacy. To succeed in business, whether locally or international, you have to go back to school and learn the financial environment involving tax, how to manage your money, cash flow, and all of that, and get very good CFOs to handle your money and advise you appropriately. But no matter the advice, ensure you understand what they are talking about. That's number one. And then number two is tech. I don't see any part of manufacturing or business today that does not require tech. So it's a mind shift. It's just not going to work and coming back. You have to know a bit of, I had to go back to school to learn a bit of tech. I have to do a lot of learnings in terms of finance to be able to compete globally. You have to add a bit of tech to what you are doing. In agriculture, in fact, you'll be amazed the level of tech in agriculture these days. And you cannot operate in silos.
Thank you. Verto?
Yeah, I would say, in addition to financial literacy, you probably, like, initially you want to start with things that don't scale. What I mean by that is, like, a lot of founders, we have bigger dreams, we want to own the world and so on. But you need to come back to basics. It's like what you were saying earlier. You need to start planning, you need to prepare. And I will always argue that as a founder, you want to be involved in every part of your business initially. Because when you understand it, it makes it a lot easier for you to recruit people that are better than you. But a lot of founders don't even know how something is done, and they bring someone in to actually solve the problem, and they expect that person to just do miracles. It will never work. So I would say, number one, you need to learn to do things that don't scale. And on top of that, once you start scaling and you want to go global, you need to bring in governance, because especially if you want to bring in investors, if you want other players to take you seriously, you have to be very, very, you have to have a lot of control in place, whether it's moving money or just having a way to make sure that your payroll is done correctly. And I would say lastly, outside building, credibility, you want to bring in compliance as well. Like in any business in general, if you're not compliant with any local laws or regulation, eventually you will have difficulties. So you start thinking from day one, how do I want to make sure I'm compliant so that by the time I get there, I'm not starting from scratch. I'm not rebuilding my infrastructure. It's already halfway there.
Thank you very much. The question for Wole, and is Mr. Chidi still with us? No, he's not. So I'll ask Mr. Tokunbo and Mr. Wole this final question. If Nigeria is to finance its growth ambition at scale, right, what is the single most important change that would give investors the confidence to commit to long-term capital?
I think what we need to understand is very simple. Financing growth is a joint responsibility because the government must do its own by providing the enabling environment. That is, the monetary and fiscal space must be conducive to the growth of the economy. The economy is just like a bird. It flies with two wings. The first wing is the monetary one, handled by, and then the second one is the fiscal. Tax is just a subset of that. So you must have in place rules that are known, that are clear, and that are, people know that they can rely on your system, that those rules will not be changed just by the whims and caprices of the officials. And I think that's what this government has tried to do by putting the person behind the reforms to drive that fiscal environment that will support economic growth and ensure that incentives that are already provided for are available for those business operators to take advantage of. So the way I would see it is this, that government must do its part, the investors also must try to bring in money, and then businesses must operate responsibly to be able to take advantage of the incentives provided by government. Thank you.
Thank you very much.
You see, they say a hungry man is an angry man. In Nigeria, the environment, you see, we don't exist in a vacuum. And data shows that the biggest problem, if you look at the data set of Nigeria, 200 million people say, how many of them are in this room? See, I'm looking at you, you're eating small chops and you're drinking water. 133 million people are not eating. They've not eaten today. They don't even know. They will not even eat. They went to bed sleeping. Let us, as business people, not discount the fact that you operate within an environment. And when people are hungry, they can't talk policy. When people are hungry, they can't engage. The only reason we're here, I drank water and I'm okay, and there's a little of security. Tangible things. I don't like using words like, oh, environment of business. No, they are hungry people. First, you have to, everything, technology, agri, finance, everything, must solve our biggest problem first. You can't have 130 million of the apex predator moving around and you are building a factory. It is not durable. Somebody is going to eat you or your factory someday, and we're seeing it. We must solve the root cause. If 100 million people, you know, that's a huge number. If they have not eaten, everything else we are doing. So that, you say one thing, what is that one thing we need to do? It's not FX, it's not tech, it's not tax, it's food.
We can go on and on. I think this has been a very insightful panel. Financing Nigeria's growth, what investors need. I think we've learned real life stories of what investors really need. And I think is what businesses must do. You've heard from the cassava queen. You might go to several banks. That doesn't mean that your model is not good. So you have to just be resilient and know your onions. Very, very important. You know, and we've heard from agriculture to FX to infrastructure to the taxman. The taxman, they're your friend. So let's be very, very clear that if your business model is right, you know your onions, you've studied it, you know the right people to talk to. If you can't achieve it, you have the partners to come to. And you know, if you're not compliant with the taxman, how will international investors also look at you? It plays across everything. So I want you to, once again, you know, because they've shared certain things with us, which I believe we should hold to allow us to better grow our businesses, better grow our funding pool, you know, and we're international now. You now have people, a lot of people are selling goods and services, a lot of designers, you know, B2B. They can have, instead of transferring money to my account here, looking for Zelle here, you have an avenue where you can have a seamless transaction. The platform is there, but please let's take advantage of it. Thank you very much.
Thank you, thank you, thank you. Please, we can do better than that. A round of applause. So time for quick Q&A. We'll take 6 questions. No, please. We'll take 4 questions. I just heard myself like, huh, Val, really? No. We'll take 4 questions. We'll take, this is how it's going to work, right? I'll take across, I know your faces. If you've asked before, I'm not going to point to you. So your name, the question. Please, I know sometimes it helps to embellish the question or just explain yourself, but just go straight to the question, okay? And if they have questions for you to explain further, they will ask. So we'll take all the questions, address it to whoever you want to address it to, and they will answer all the questions at once. Does that work? Good. So we'll start with the lady over there, and then the gentleman over there. You've asked before. This lady here. One more. Guys, how far? You guys are not asking questions today.
There's a lady
and then that gentleman over there. So we'll start the lady here.
Thank you. Hi again. My name is Naza. So my question is to the cassava queen. Thank you so much for sharing your insights. So I'm glad you mentioned technology, because while you were speaking, I imagined how you leverage, because you work with smallholders, farmers, I imagine how you leverage technology and innovation. My parents are poultry farmers. Sometimes it's so difficult to communicate certain things to them, and I can't leave everything I'm doing to, go and help them. So how do you bridge that literacy gap? And then secondly, what are the key challenges? You've been in this business for over 15 years. What are the key challenges if you were to start all over in another world, of course? Thank you.
Please, one question per person. Thank you. Next question.
Good afternoon, ma'am. My name is Abdul Latif. My question directed to the cassava queen. Yes, ma'am. I'm currently serving in Nigeria Port Authority, and I'm a co-part there. And the department I'm serving, I have a chance to experience and know of first-class raw data, or between raw data of import and export. And I can tell you, ma'am, there is a strong and first-class imbalance between import and export in Nigeria. So yes, ma'am, what do you think the practical step that federal government can take to reduce the over-dependence of import and strengthen the value-added agricultural export in Nigeria?
I know you know what I'm saying next. To make your questions easier to answer, please make your questions simple. Thank you.
All right. Good afternoon, everyone.
Next, yeah.
My name is Rita. I am a chartered director working with an FMCG. My question is to the lady and the man who's running VertoFX, right? So we know that in Nigeria, the government can be a regulator, a partner, or your competition. What are the policy reforms that you want to see happen within the next 18 to 24 months to accelerate the growth of your businesses?
Yeah.
Okay, my question is for everyone.
Your name first.
My name is Praise Olatubosu. The question I want to ask is, if you have a business and you're trying to introduce partners, like a co-founder, so the business has been running for a while, I wanted to know what method can be used in getting the right co-founders, and also what can you offer them, or what can you look out for? That's just my question.
Okay, we can start. Okay, the last question, please, very quickly.
Good evening, everyone. My name is Nkechi. I sell industrial chemicals, majorly for water treatment. But this business is my mom's. She does it in a shop. But now I want to bring innovation to it. I want to transition the business into a more scalable and a more structured business. What is the strategic shift that I can do to achieve this? Thank you.
The floor is yours, panelists. The floor is yours to answer the questions. So the first was to Cassava Queen, and yes. Madam? Yeah. The first was on the literacy gap and how to close that.
Okay, so the first question was, how do you bridge the gap? How do you bridge the poultry gap? What are the challenges? Okay, so I'll start with the practical step government must take to be able to reduce over-dependence on imports. It's a very tricky question, okay? But we'll try and be as calm and as subtle. We really can produce everything in Nigeria. That's the truth. Sometimes I get very emotional when I have to answer this kind of question. But I think I'll just be very straight. What government needs to do is to protect the few companies that have even started. If we are protected in some way, we are not saying give us money, blah, 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 but make it a bit difficult for the one coming from outside to come in. Even if there are no too many enabling environments,
you will create it by yourself. I'll just use a story to answer this question. When we started Psaltry, it was in the middle of a jungle. You can go and read the story. No light, no water, no road, nothing. The only thing was the people were farmers and they had land. And I saw that this is where I want to put it. I didn't want the farmers to be traveling long distance. Today, we have power. We brought power by ourselves. In fact, we are generating our power, 1.6 megawatt in 15 years. We have water. We have road. We have given the communities these facilities as well. Meaning that is enabling my environment very well. What we need more is protection. Because if I generate enough cash flow, I will possibly create my enabling environment. Government didn't do my power. I did it. Government did fix my road. Well, Oyo State government eventually, after 15 years, came to do the road. But I provided the road by doing a feeder road. The protection should be government should please put a little bit of high tariff on products that are being produced in Nigeria so that we can compete. Once we can compete, I tell you, these companies will grow, they will employ more people, they will be strong enough to start facing the companies from outside Nigeria and be able to export. So export will increase once the companies become stronger financially. They will be able to take economic of scale. Instead of selling at 2 naira, they can sell at 1 naira 50 kobo and be able to start to compete because they can sell more. So that's just like
and I think just to add to that, Mr. Wole said we need to feed people. These farmers can now feed their family because you're giving them empowerment.
In fact, the ripple effect is massive. We started with 17 farmers. We have about 22 farmers today. That community today is one of the richest community around. They can send their children to private schools. It's a case study you need to come and see. I mean, it's something that you can read to know that just starting a concept can grow an economy and become something that thousands of people will be liberated from poverty. So, government protection. Even government protection above infrastructure. If we have government protection, naturally, people will create the infrastructure. If you can't get to your farm, what you carry bulldozer to quickly clear? If you are selling, somebody wants to buy 1 billion naira worth of starch today. I will use hand and everything to make sure that my goods get out. Even though infrastructure is okay, it's important that government provide those things, but above all is that little protection. That's number one. Number two is, I didn't get the question very well.
So he asked the question about practical steps to reduce our dependence on export. And while we were talking, it made perfect sense because if you can incentivize the economy of that local community, they don't need to export to bring back foreign or whatever funds to boost their economy, right? They are self-employing.
So I've answered 2 questions in one.
Exactly.
I think the young lady there was asking about communication.
Right.
Okay.
So it's how do you communicate? Because
very
of
good. When we started, it's a purely Yoruba community. The farmers were very old. In fact, our youngest farmer was about 55. So almost some of them are dead now. Some of them are still alive. Children have taken over. So we developed our manuals. So we started trading farmers. So we developed our manuals in Yoruba. Then they didn't have bank accounts. We go and meet the bank. Because, in that community, we became big. So we can command Union Bank to say, bring your machine to my factory. And they will bring it. That's true. And then I'll get my farmers. I'll say, I will give you 200 farmers today, 1,000 farmers today. And then we get them to do their thumbprint, their BVN, their NIN. All the machines were brought to our factory for farmers to do. Today, they can use ATM because we take them there and show them how to use ATMs. They can communicate in Yoruba. So you can teach your farmers everything you have in English, translate it into Yoruba or Hausa or Igbo. The most important thing that they can communicate is not compulsory, it must be in English. Is that they must be able to say, I spent 50 naira and I want to sell it in 70 naira. They know how to do their debit and profit. They can do it though. Don't think they cannot do it. It's just for you to teach them. So I don't know if I've taken all the questions.
So let's move on to the next one because we're out of time. There's a question to Verto. Policy reforms that you want to see change in the next 4 or 5 years?
Yeah, I'll probably say the next investment that we want to see in Nigeria is not about who's building the next, I would say, fancy app, the next solution. What we actually need is a regulatory standard. So I'm talking about if a founder wants to start a business today, you have to dance around CBN, SEC, many other regulators. It's super expensive, it's time consuming, and if I'm being honest, it's also not that clear. So it's not like you can't say like, this is the 5 items you have to do, and once you've done it, you get the license. It's so convoluted. So if we want any change in policy, is to have one single platform, portal, where as a founder, I can go in there, explain my business, explain my vision, explain what I'm trying to do, and I know straight away which regulators I need to speak to, which one I need to get licensed. It will make my life easier. It will make a lot of founders' life easier. And from that point of view, when it comes to things like even paying your tax, you should know that, okay, if you are registered within this industry, this is your license, these are the tax sites applicable to you. Things like that will make it a lot easier for businesses to grow. So that would be number one. The other thing around policy that I would say the government needs to do is, I know in the last 2 years, CBN they've been trying to promote KYC verification using BVN. Again, if you're a small startup, you have, I don't know, $10,000 to start your business. It's also expensive to be allowing all your customers to go through BVN verification. So I would say the government needs to find a way to subsidize new startups, because from day one, you want to make sure they're doing the right thing. If you don't encourage them to do it, they will take forever to do it, and that's not what we want. So if you're going to change any policy, one is definitely make it easier to be licensed or be regulated, and secondly, make it easier for new startups, like subsidize whatever you're selling so that people can actually adopt it a lot easier.
Very quickly, thank you. Let's move on to the next one. I'm trying to see how I can merge that into one, but methods to get the right co-founders to join your business, and then scaling or transitioning a water treatment business from traditional methods to an industrialized way, just so that you can boost the business processes. Anybody can take that.
I can answer the founders one.
Sorry?
The one on the founders?
Yes, co-founders, getting the right co-founders.
Yeah.
Sorry?
I would say to find the right founders, if you are a founder yourself, you need to know what your strengths are without lying to yourself. So if you don't know your strengths, you're going to bring in someone that probably doesn't complement you. So the early days is where it's all hands on deck, it's you and a few people. So your co-founder should be doing what you cannot do, because that's how you divide and conquer. That's number one. Number two, you have to actually incentivize. It's a lot easier, and I've seen a lot of founders where you think because you have the idea, you have to be the CEO or you have to be this. Just because you have an idea doesn't make you CEO. You need to know between you and other people who is the right person. A CEO is just a front of the business. What actually happened behind the scene is what's important. So make sure that you take the right role within your own business. What's important is what are you getting out of that business? So your equity and so on. You have to incentivize your co-founder. If someone asks me to come and work with them, they own 90% and I own 10%. From day one, that person is already resentful. You won't know until when your business starts to scale. When people start thinking about the real money that's coming out of it, that's when you will see problems. So you want to make sure from day one you incentivize your co-founder correctly. If not, that business is not going to scale.
Thank you very much. A round of applause, please. Madam, you wanted to address the water treatment business in 1 minute, please. Thank you.
The water treatment, I think your mom should change her audience, change her market. Go industrial. There are so many industries looking for that chemical. You mentioned, you said it's industrial chemicals. So look for companies and be their direct supplier. So it will increase her sales, and it's easier for you to work there and increase the company. It becomes a big company. It's a big business. It is.
Please, a round of applause for our wonderful panelists. It's such a robust conversation. I'm so glad that we had this for the last executive roundtable.